Stephen, central bank proposes it's going to take some measures if banks do not respond to its monetary policy indicator, bring the CBR down, and yet the banks are not responding. First, let's ask a general question. Can the central bank actually bite?
I think the law is on their side. The governor is talking about invoking Section 39 of the Bank of Uganda Act, which gives them the powers, in consultation with the Minister of Finance, to set maximum lending rates. It's a tall order, and when you try to analyze it, it goes against the free market policies.
Absolutely. I was actually thinking about reversal.
True. I wouldn't call this reversal per se, but it's an administrative measure in that regard. Administrative in the nature that moral suasion has failed to work, and the monetary policy signal continues to be very, very weak. Then what does the bank do in this sort of situation is to give out a hawkish warning. What surprises me is the strong hawkish tone embedded in the circular to the banks. In normal times, one wouldn't expect the bank to behave like that because of their strong free market credentials.
I mean, are you going to blame the banks? Cost of operation is income to cost ratio for most of them is nearly 50% or just above. And in terms of demand and risk at this time for lending.
Correct. But I think when you read between the lines, the central bank is saying, let us all share in the burden of picking up the economy from the doldrums. Can we all participate, make a contribution towards this effort of picking up the economy?
How much do you predict banks can go?
If you deal with the inefficiencies in the system, adopt more technology in the banking, do a lot more of digital banking, my own estimation is 300 basis points off that would make sense. Okay. At this point.
We come down to about 15%, 14%.
Absolutely. That would be my take, and that can be huge, can have a huge impact on economic activity.
Okay.